Good morning, everyone. Thanks a lot for joining the Buying a Home in the Netherlands webinar. I hope you can all see me and hear me correctly. My name is Kimo Paula, and I will be hosting this together with Robin from Mr. Mortgage, who is also in video. Maybe good for everyone to know this session will be recorded and shared, so no need to take any notes. Like I mentioned, I am Kimo, and I am the founder of Expat Housing Network. And what we do is we help people find a home in the Netherlands. But before we do, let's get to know you a little bit better. We have a poll. By the way, maybe for your information, I am taking over from a colleague. So it's been a while since I did this webinar. However, I have helped plenty of people out with purchasing a home. But we've got a little poll for you. I'm going to launch it right now because we'd love to get to know you a little bit better before we kickstart this webinar. So we have a few questions, not mandatory. Just let us know if you want to fill it in. Where did you find out about this webinar? How old are you? And what does your household look like? What made you decide to buy? And where would you like to buy? I'll give it a minute and then we'll continue with the webinar. Allows me to take a quick sip. Seeing the first responses come in. Thanks a lot. So a lot of you have seen us via Facebook or the website, newsletter as well. Some people coming in. The majority of you are between 25 and 45. And what does your household look like? A lot of singles, some couples, and a few families. What made you decide to buy? The rents are too high? Well, that's clear. I would love to settle. That's a great compliment for the Netherlands. And I would love to build up equity, which is a nice bonus. Where would you like to buy? In Amsterdam or Haarlem, or we see Rotterdam and other as well. So that is great to see all over the country. Thanks a lot for filling this in. Let's continue with the session. So I believe greatness is achieved in the agency of others. What does that mean? Well, if you decide to move forward with Expat Housing Network as your buying support, then most likely you'll deal with one of my lovely colleagues. They're either from abroad or they have lived abroad, so they know what it's like to move to a new country and find and set up a new home. And they have tons of experience in helping people purchase a home. So much more now that I'm not the most knowledgeable person anymore in the whole team. So that is nice to see and be surrounded by great people. Maybe a little bit more about EHN. We're not traditional real estate agents. Our background is from social sciences or anything else. We do have tons of experience and we help with buying and renting. So we do not sell at the moment or anything like that. So our total dedication and focus will be on you and your case. We charge a fixed fee, so no commissions. Why would you pay more if you're already paying more for the house? And we know what it's like to sell into a new country, like I mentioned. I'm breezing through this part of the presentation because this is something that we'll also be able to share if you decide to move forward or just schedule a free intake call with us. But what is our added value? Selling agents take our offers more seriously because we've done the due diligence. We can sometimes book in viewings when it's no longer possible, and we support, of course, with reviewing all the legal documents. We'll help define the market value of the property. I'll share a little bit more about that later, and we'll inform you about the rules and regulations. And of course, we'll make sure you don't make the same mistakes that I made when I started. About 6 years ago, it took me a long time before I got an offer accepted. That was way before I actually was in this business. But we've learned a lot over since, and we'll make sure you don't make those same mistakes. Robin, welcome. Great to see you again.
Yeah, thank you for hosting again. Good to see you again. Perfect. So good morning, everybody. My name is Robin uit Den Haag. Let me pronounce my last name because it's pretty tricky for non-Dutch speakers. And I'm accompanied by my team, Cesar, Egle, and Uskan. We have it's quite an international team. Where you grew up, how you grew up, or well, so that's that we can really relate to being an expat somewhere. If anything, Cesar moved to Denmark, working from there now as well. So he's experiencing the adventure of being an expat somewhere. So he's practicing what we preach. And what we do is we are your financial experts, so your financial specialists, and guide you through the house hunting process. We're not real estate agents, we're not buyer's agents. That's where Expat Housing Network is the primary expert, but we'll guide you from the financing standpoint. Now, what we do, we're different from banks, for instance, because we have a range of about 35 plus lenders, banks, and so on. So what we can do is we can find the sweet spot of the best interest, your conditions, your preferences, essentially get a tailor-fit mortgage for you, so you know that your finances are well taken care of in the lovely home that you'll buy here in the Netherlands. So we'll guide you from A to Z to make sure that this whole process is an exciting process and not necessarily a stressful process, and to guide you through this whole experience. So that's what we do.
Thanks a lot. One of the reasons why we really enjoy working with Mr. Mortgage is that they understand you like no other. What we've seen, and especially in the past, we've worked with some other parties, is that like when you move from a different country, there's an added complexity to actually acquiring a mortgage, finding a home. And what we've seen is especially local providers are sometimes a little bit less capable of actually understanding what you're going through and what it means to actually secure a mortgage. So one of the reasons, besides, of course, the great style and the lovely customer service, is that they really understand how to actually help you and support you. So a little bit less about that. Let's move on. Great to hear, by the way, that Serge actually moved. I didn't know that. So that is interesting. Living the expat life. That's always great. Yeah, a few things. Today's goal is to add value to you. We believe in sharing information freely, so we'll try and share as much as possible. We have an hour for this presentation, including the Q&A. So what we'll do is we'll try and answer the majority of your questions. If you have any follow-up questions, then schedule a free intake with Mr. Mortgage or with us, because we're happy to answer all of them. No strings attached, no strings attached. What is maybe good to know is a few things. National Mortgage Guarantee. What is that? National Mortgage Guarantee is kind of like an insurance. Let's say you buy a house and something were to happen, you lose your job, you lose a limb, you lose a partner, God forbid it does. But then what happens is that most likely you have to sell the house. Let's say the value of the house is lower than the outstanding mortgage, then you have a deficit, so you have a remaining debt. The National Mortgage Guarantee technically covers that for you. However, National Mortgage Guarantee is not for everyone. So only if you buy a house up to 355,000 euros this year, and by the way, that's the value of the property. If you buy a property up to 355 of the value of the property, then you'll be able to use this guarantee, not anything above that. So that is good to know. Last year was a little bit lower. We expect it to increase next year. It's a little bit based on the price development overall. So that is good to know, especially if you're buying maybe some of the less expensive areas. This is something that might be useful. Then transfer tax, Robin.
Yes, transfer tax. That's a hot topic now as well. And there's some rules and regulations regarding that. So between the years 2021 and 2025, so up until the 31st of December 2024, if you're less than 35 years old, so younger than 35 years old, and you buy a house up to 400,000 euros, you don't have to pay the transfer tax. Now, the regular transfer tax when you buy a property for your personal residence is 2%. So you pay 2% of the purchase price to the tax authorities. Now, again, if you buy a house up to 400,000 euros and you're younger than 35, then you don't have to pay this 2% transfer tax. Pretty straightforward so far. But there are obviously, as there always are, some exemptions there. So what happens if you buy a house together? So that's the middle scenario. So Kate is 37 and John is 33. They buy a house for 400,000 euros, but because Kate is 37, she's older than 35, obviously, so she does have to pay 2% transfer tax, but only over her property share. Now, the basic property share division is 50-50, so then Kate would pay 50%, 2% over half of the property purchase price. Obviously, John is not 35, so he doesn't have to pay any transfer tax. So that's how this works. Now, to dive a bit further into the rabbit hole of this transfer tax exemption, what if Kate and John are both 35 years old or older, purchase a property for 500,000 euros, then obviously they both pay 2% transfer tax. Now, there are more variables here, of course. So if you have a different situation, just reach out to us and give us a quick call, and I'll explain exactly how it works. Or whenever this when this presentation is shared, you can click on the Visit the Transfer Tax Checker, and then you can also check your specific situation and see what it means for you.
Perfect. Thanks for your explanation, Robin. So another quick poll. Where in the process are you? Are you in your orientation stage? Are you searching? Are you actually viewing a property? Or are you a bit further? So I'm going to launch that. I'm very curious to learn from you guys what stage you are in. I'll give it a minute. Feel free to just answer them, and then I'll share the results out loud. So the first question is, where in the process are you? The second question is, did you chat with an agent yet? And the third question is, did you chat with a mortgage broker yet? So a lot of you are researching. Okay. So that's good. There's a few that are viewing properties, but the majority is still researching. That makes sense. Hopefully we'll be able to add some value to you in this presentation. Did you chat with an agent yet? Some of you have, but the majority of you hasn't. About 90% has not. And did you chat with a mortgage broker? The same variables, about 10% has, and about 90% has not. The reason why we're asking that is because we're always curious, of course, to learn what added value we give versus what you've already learned from an agent or another mortgage broker. So that is great. Thanks a lot for filling in the poll. Let's move on. By the way, if you have any questions, pop it in the chat box. We'll try and answer the majority of them at the end of the presentation, of course. However, I cannot see the Q&A if I'm presenting. I'm not sure why that is, but if you have any questions, pop it in the chat. So renting versus buying. Robin, could you share a little bit more about that?
Sure. So why should you rent? We're calling this a mortgage, but it doesn't mean that we'll push you to buy a house. We'll first see if it makes sense with financial analysis, just to check why does it actually make sense in your financial situation and your situation overall. So why should you actually rent? So renting your home, obviously you have some flexibility. You can give notice to your landlady or landlord, and then you can just move out and to your new house. You don't pay any taxes or maintenance over the property, and there's no down payment required when it comes to buying a property, obviously, renting a property in this case. Maybe you have a security deposit, but if you take good care of your property, of the house, then you obviously get it back. Now, when you do own your home, you do have to pay taxes. You do have to take care of the maintenance, and it can be harder to move, in the sense that you wouldn't have the flexibility of a month and then you can just go on your merry way. You have to put your house on funda, have to sell it, and go about all that. Now, in present day, obviously, it wouldn't have to take that long in any case, but it is a step that you would have to take as well. So if you're still interested in buying a home, which you attending this webinar, I would think you might, here's our reasons to why you should buy. Owning your home, you have stability. You know the house is yours, your landlady or landlord you don't have, so they won't be able to evict you anymore. Your monthly payments, you build up equity. In your monthly payments, you pay interest, of course, paying the bank for lending you money, but you also repay on a mortgage. That's kind of a savings account in a sense, because anything that you repay, when you sell the house, you get it back. So that's building up equity. And the interest that I just mentioned, you have an interest deduction. Now, what that means, essentially, you have a tax benefit over the interest that you pay, so you get part of it back the year after you paid it to the mortgage. Now, renting your home, the rents are expected to keep on rising. So you wouldn't have that with your mortgage, because there you lock in your interest rate for the next 10 years, let's say. So for the next 10 years, you know exactly what your monthly payments are going to be. Renting your home, you don't necessarily know. There's no tax benefits when renting your home, and there's no creation of wealth in the property that you live in, that is. So those are the pros and cons of owning and renting a property. Now, when you look at the figures here, renting versus buying, you can see two similar properties. On the left, you can see renting property for a rent of 2,250 euros per month, and on the right, you can see a purchase price of 525,000 euros. Kind of resulting into a monthly payment of, let's say, around 1,800 to 1,900 euros. Now, when you really compare the two, it's essentially renting, paying rent is money down the drain, because you get nothing back from this rent that you pay. The similar thing in your mortgage is the interest that you pay, because you don't get anything back from that, apart from the tax benefit, of course. So when you compare the two, you can see that in the right bottom table, you can see the interest payment in the first month is 691 euros. So that's significantly less than the interest than the rent that you pay, of course. Even the monthly payment is significantly less than the rent that you would pay. But as mentioned before, you do have to pay a down payment and the closing fees. That's kind of the investment when buying a home. And that's approximately, in this case, let's say 23,000 euros. So then the trick is, so when does it start making sense financially to buy a house versus renting a house? Now it says here 15 months, let's say it's 18 maybe, so that's 1.5 years. Now that's really cold financial calculations. That doesn't concern if it actually really makes sense. It really starts making sense to buy a house when you live in the property for, let's say, 2, 3, 4 years, if that's your horizon. In 5 years, right here stated, if you have a mortgage of 525 to an interest rate of 185, they're a bit higher right now, but just to give you an example here, the mortgage after 5 years is 453,000 euros. So you build up equity, cash in hand, if you sell the house, of about 71,000 euros. So that's the buildup of equity in the first 5 years of your mortgage in this example. So that's definitely way different than when you rent a property, because then you don't create any wealth there.
Perfect, thank you. So it makes sense. Don't do it for the short run, do it for a little bit of a longer term. By the way, I started answering some questions in the chat, so dive in there if you see one of the questions that you would have also liked to ask also being answered. So I'm going to talk a little bit more about market drivers. What caused the price to increase? Because we've seen, especially the last couple of years, we've seen steadily price increases across the board. But it's good to understand why that is. So fiscal benefits have a very big impact on the prices. Tax exemption, for one example, Robin shared a little bit more about that. So you don't have to pay transfer tax anymore if you meet the criteria. What we're seeing is that money is being put back into the offers that people are making. Interest rebate. One of the questions I got in the chat was, can you actually deduct the interest off your tax or your taxable income? That is correct. So at the end of the year, you can deduct the interest that you're paying on your mortgage off your taxable income. So that makes it very appealing to buy a house and also a little bit cheaper. There's no capital gain. So if you sell the house, first of all, there's no penalty to pay off your mortgage, but also there's no capital gain. So let's say you make 50,000 euros, 100,000 euros on your property, you don't have to pay taxes over that. So that we're also seeing being put back into the housing market. And there's tax-free parent donation, which however will be ending. So, but up until last year, we saw a lot of people actually donating up to 100,000 euros to their kids that could actually use it to buy or renovate a house. So again, that has an impact on the housing market because it makes it very interesting to buy a house versus renting a house. Then let's not forget the low interest rate. That is also, of course, driving people towards buying a home because your monthly cost will be much lower than it was like 20, 30 years ago. And then, of course, the high rents. We already talked a little bit about that. Some people actually highlighted that in the poll. So that is also driving people to kind of like the buying market. Why would you continue to rent if you're paying a lot of money? Well, Robin just shared a little bit more about the pros and cons of renting versus buying. So we're seeing that. And of course, don't forget lack of supply. And honestly, with all the situations, like I would say, COVID has an impact on the supply chain, but also now the war in Eastern Europe. So in Ukraine has an impact on the supply chain, has an impact on the cost of materials. So I will not expect that we're actually going to make all the quotas that we've set ourselves for the next couple of years. So that means that there's a bigger demand than there is supply. And of course, in the end, price is all about demand and supply. If there's more supply than demand, then price will most likely drop, and the other way around as well. So that will drive the price up. If you expect me to kind of like make a prediction, I will not make a prediction for long term, but I do expect the prices to continue to go up this year, probably next year, and most likely the year afterwards as well. However, we of course do not know what the world will bring. There's all things that we couldn't have foreseen. COVID I hadn't foreseen, and also the Eastern European conflict I couldn't foresee. So let's not look too far in the future. And honestly, I think if you buy a property, do it for a little bit longer than a couple of years. Do it for a little bit longer. I would say like 5 years, like Robin mentioned, or a little bit longer even. If you decide to leave, there's options to keep the property on. What would you need in savings before you start? There's a couple of things that you would need. I would like to say that you would need between 3 and 5% of the purchase price. I would like to say that this 3% if you have to pay transfer tax, so if you're eligible to pay or if you have to pay, then it's about 5%. If you don't have to pay, it's closer to 3%. These are all of the costs that we've highlighted that makes sense, and most likely are the costs that you'll face when buying a property. I'm going to highlight and zoom in a little bit on the third column, which is the column where it's tax deductible. So the government wanted to make it interesting for you to use some of these services, because especially when it comes to anything mortgage related, that's a pretty complex product, right? So you don't want to make a bad decision on that. So what they decided is to make the costs that are mortgage related tax deductible. What does that mean? You can deduct these amounts that you're paying to, whether it's the notary for the mortgage deed, whether it's the mortgage broker, so in this case, Mr. Mortgage, or whether it's the appraiser, or if it's the NHG, you can deduct those costs off your taxable income at the end of the year. So you get some of that money back, which makes it quite interesting. But again, take into account that if you have to pay transfer tax, you need about 5% of your purchase price to save. If you don't, you need about 3%. That's kind of like the rule of thumb that we use. And of course, these prices may vary a little bit per region, but this is a calculation of that. Okay, a few tips to win in the current housing market. Let's focus on value. This is a property. It's on the market for $395. People ask us a lot, like, how much should I overbid over the asking price? Well, stop it right there. That's the mistake that the majority of the people make, because what they do is they base their decision on a very subjective manner. Why? Because the asking price is the price that the selling agent or selling party can put the property up for. It has no reflection on the actual value. I know that, for example, I think it's in Belgium or in Germany, they can only kind of like have an asking price of about 5 to 10% of the actual market value and not more. I think that's something that we might want to do in the Netherlands as well. But in the Netherlands, it's still free. So let's say the agent puts it up for $395. However, the market value of the property is $415. Okay, the purchase price, somebody buys it for $435. The difference between asking price and purchase price is 40K. It's about 10%. And then the difference between market value and purchase price is about 20K, which is about 5%. Okay, let's use the same property, but a different agent. Maybe this agent is a little bit more cautious. Maybe he's a little bit more opportunistic. Maybe he wants to show off to the sellers more because he thinks that if he lowers the price a little bit, he'll get more people in. He might get the same amount, but he can boast because he can show that he's received a bigger difference. So let's say he puts the property up for $375. The market value, however, doesn't change. Somebody buys the property for $435. Let's see. The difference between asking and purchase price is 16% versus the 10% that we just saw. The difference between market value is still 5%. So what would you do if people ask you, okay, hey, well, how much should I overbid over asking price? Then you would say, and that's what we do, don't look at the asking price, look at the market value. Because if we would apply the logic of how much should I pay over asking price to the previous property, which was on the market for $395, let's say we would offer 16% over, you would be paying more than you initially have to. So what we do is we always look at the market value. How do you define the market value? There's a lot of different ways for that, but we'll be happy to support you with defining the market value of the property. Okay, then second tip, what is a winning offer? A winning offer is an offer, of course, that appeals the most to the selling party. What are the conditions there? A good price, of course, right? It's not always the highest price because the selling agent will want to know that you're actually going to be able to buy it for that amount. So you could offer 30% over, but if you don't have the money, if the mortgage is not going to come through, or if you don't have enough savings, then the selling party will not accept your offer. Then, of course, security. The seller will want to know that a month in or 2 months in, you're not going to suddenly pull out. So do your due diligence, give the seller security that you're going to move forward, and of course, share a little bit more about who you have surrounded yourself with in terms of specialists. Then offer the least amount of hassle. So let's say a seller, what's the best example? Let's say you submit an offer today, right? And the seller will want to move out the 1st of August because they have a new build, it needs to be finished, but you really kind of like zone in on wanting to move in the 1st of June. That will create a lot of hassle for the seller because the seller will need to move out, move his stuff, find temporary accommodation, and then move his stuff again to his new home. That is one example. So try and figure out what drives the seller. What are the days that they want to move out? What are the reasons why they're selling? And try to cater to that a little bit. Especially right now in this market, it's a seller's market. So there's not a lot of room for you to wiggle in terms of these things. Of course, if you're mindful in your offer and also offer personal touch, which is the last part, that could definitely help. Share a little bit more about yourself, why you like the property. Most sellers are private homeowners who have built an emotional connection with the property. They'll want to sell to somebody that can appreciate it as much as they can. So if you have an offer that is similar to, for example, an investor, most likely you'll get the offer accepted. So share a little bit more about yourself. That is the third bit, and the fourth, also the second tip, and the third thing is due diligence. So we have a technical inspector which will inspect the property and see if there's anything wrong with the property. It's good to know this information. Huh? The appraiser will check the value of the property. Please note that if you go to a bank, the bank will say, okay, we're only going to give you 100% of the value of the property. But the value of the property cannot be defined by your buying agent or by the selling agent because they're biased, right? So an independent party has to come in,
do the valuation, send the reports to an independent institute, which will verify it, and then it's sent to the bank. My question to you guys is, when do you book these? Do you book them before your offer is accepted or after your offer is accepted? Maybe pop your answers in the chat, because I'm curious to see what you guys think. So do you book the technical inspection before your offer is accepted or after your offer is accepted? The same applies for the evaluator. So we have a few befores. Uh-oh, the gates have opened. The before, engagement before, but actually use after. Before, after, Jackie says. Song Wong says after. Pardon me for butchering everyone's name. We're gonna spill the beans on this one. It's actually after the offer is accepted. What happens if you book them before? Because these guys cost money, right? So let's say you book the technical inspector and the appraiser in before your offer is accepted. You'll pay about $1,000 to get them in, and then your offer is not accepted. Then you've lost that money. Plus, that information that they'll give will not give you the kind of like upper hand in an offer. It will help you kind of like define what you want to do after, but I think it's a bit tricky, right? Because one of the things is that people think that once their offer is accepted, they're committed to the deal, but they're not. You're only committed once you've signed the purchase contract, which will take about a week and a half after your offer is accepted. Sometimes a little bit faster, sometimes a little bit slower. So what do? You still need this information, because you don't want to sign that contract and be committed to a property that turns out to be a bad buy or turns out to be worth much less than you actually offered for. So what you do when your offer is accepted, you call these guys and say, okay, hey, I want to actually get you in ASAP because I would love to get a physical, like an inspection, and understand what I'm buying. And I need that valuation, both for my mortgage, but also because I've submitted an offer which is maybe a little bit more than the value that I think it is. So make sure you book them in ASAP and get these reports before you sign the purchase contract. You have about 3 days after you sign the purchase contract, or you have 3 days to kind of like, I don't know, reconsider and pull out without giving any reason. So technically, you're not fully committed until those 3 days have ended. However, you don't want to take too much risk, plus you actually have to incur notary costs. So try and get the reports in ASAP and no latest before the purchase contract. If that is not possible, then make sure you get them no latest before the cool-off period. We'll help you with that. Okay, so the last little bit of this presentation before we dive into some of the frequently asked questions, and then of course the Q&A from you guys, is the timeline. So this is a bit skewed, right, this timeline, because it can take anywhere between months and years, depending on what you're looking for and what's on the market. But let's say you start the search, then once the search is started and your offer is accepted, that's great. Then you get the appraiser and technical inspector in, that's awesome. Once you've done that, you're happy with it, you sign the purchase contract, then technically the mortgage application starts. But please don't wait until this moment to chat with Robin and his team, because you will need to actually prepare a lot of stuff beforehand, and they'll be able to share with you as well what you can borrow and so on. So get a chat with them ASAP before you start, when you start, or if you already started. But they will file the mortgage application, then the cool-off period ends, and then you have a bit of a slow period where the guys from Mr. Mortgage are pulling their weight. So what they're doing is they'll get your mortgage accepted. That's great, congratulations. Then what happens about a week or 10 days before you become the final owner of your property, you'll get kind of like a final statement, which is kind of like the final bill, because we said you have the purchase contract, and on top of the purchase contract, you have purchase costs, but the bank will only give you 100% of the value. So maybe there's a little bit more that you would need to pay for the property and of course for the purchase cost. So that is something that the notary will request for you to transfer into his account. And of course, the final deed of transfer will be shared with you, which will make you the proud owner. On the day of transfer, you'll go to the property first, you'll inspect it, make sure that it's still in a similar condition. If not, then there's a lot of things that you can do. We'll not dive into that at the moment. But if it is in a great condition, which happens about 99% of the times, you'll go to the notary, you'll sign, you'll become the proud owner of a home, the proud owner of a mortgage, and you'll get the keys from the seller. Then there's a little bit of time after you become an owner where you can actually hold the seller liable for things, right? Let's say something is not working, which should be working and should have been declared to you before or upon the day of transfer. then you have the rights to hold the seller liable. Let me give an example. We had a case where we bought a home for somebody and turns out that a power socket was not working. That was not shared. And of course, you don't check all the power sockets in the house, right? It can be quite a lot. It wasn't working, so we had an electrician come, and it turned out they had to rewire part of the system. That would cost about 1,500 euros, and the seller never declared this. The seller had lived in the property for about 6 years, so they should have known about this. So we held them liable. The seller paid for it in the end. And let's say we would have found out 2, 3, 4, 5 months later after getting the keys, then the seller could have claimed, hey, sorry, it was working when I left you the keys and it's no longer working right now. So don't wait too long with sharing this information. Okay. Frequently asked questions. We're breezing through this thing, eh? So there's a couple of questions that people always ask us. So we thought, let's just tackle them before anyone else asks them. And the first one is, can I get a mortgage with a temporary contract or as a freelancer? Robin.
Yes. Well, yeah, you can. Obviously, it depends kind of on your situation, but to give you a quick rundown here, when you have a temporary contract, the most important thing is that you covered your probation period usually. When you have some history in the Netherlands already, that you lived some years and worked some years in the Netherlands and you are in your probation period, sometimes there are even options there. But essentially, when you're in your temporary contract, so for instance, a year, and you covered your probation period, there are still possibilities. The best thing would be is that your employer would give you, in the employer statement, a declaration of intent. What this means essentially is that your employer says, well, all right, our employee is doing their work perfectly fine. If they keep up the good work and we are doing financially well, we intend to keep him on or her on and give him or her a permanent contract. So it's an intention. It doesn't really mean anything to the employer because it's not legally binding on everything. It's just kind of an extra reassurance to the bank that they're intending to keep you on. So that's for one. Then we can just consider your whole income in the mortgage calculation. So that should be good. When you're a freelancer, when you're an employee, it's very black and white. It's just your income and that's it. When you're a freelancer or an entrepreneur, it can be a bit different. What you would read on the internet is that you need at least 3 years history in your company in the Netherlands. That's not necessarily true. We can already make do with just 1 year. 1 year does mean the full 365 days or 12 months. That's very important. And that you're registered at the Chamber of Commerce. And then we'll take a look at the average income over the time that your company has existed. And then we can base the calculations on that. Again, by all means, there are always some additional variables. Just check in with us, schedule a free introductory call to see what your specific situation is. But essentially, short answer, sure.
I like short answers. Thanks, Robin. Then what happens if you want to leave the country after several years? I saw a few questions about this pop up. Of course, you never know what's going to happen, right? So you guys are from abroad, majority of you. So what happens if you buy a home and suddenly you relocate or you want to move back home? There's a couple of things you can do. So first of all, you can keep your home, but of course you incur your mortgage costs. By the way, it's not illegal. It's not. It is allowed to have a home while living abroad, so no worries about that. This is not the smartest option, of course, because it's going to cost you money. The second option is you can actually rent out your home. However, you would need permission from the bank. So technically, you'll buy your home if you're going to live it with a residential mortgage. If you want to rent it out, you need a buy-to-let mortgage or investment mortgage in this case. The conditions there are a little bit different. So please do chat with the guys from Mr. Mortgage when you consider this. The third option, of course, is sell your home and you don't have any penalties. So you can pay off your mortgage without a penalty and you don't have any capital gains. So let's say you've made some money, that is great. You don't have to pay taxes over that. So these are the three things that you can do when you decide to leave. Now, question, Robin, can I rent out my house or a room?
Yes, you can, but there's some conditions there, obviously. So let's start with the room. Renting out a room, sure, that's no problem. You can have a roommate. It won't be checked if you if it's your life partner or just a friend. You don't have to show your love in going to the bank, so no worries there. That's all good. So you can have a roommate and then rent out the room. Do consider then when you rent out just a room of your house, to a certain amount, the rental income will be taxed. So just be sure that you know what's going on there. Also, one thing to keep in mind is after a certain amount of time, a roommate or a tenant in any shape or form will have certain rights to stay in the house. So if you then want to sell your house and your roommate says, well, sure, yeah, but I really like it here, I want to stay here, you cannot just evict them. So it could be sensible to have an eviction clause in your rental agreement there, that if you say, well, okay, sure, if I want to sell the house, then you have to go as well. That's when renting out a room. Renting out your entire house, that's a bit different. But what Kimo already mentioned is that when you do rent out your house, you have to get confirmation of approval of the bank, or you have to refinance your mortgage into an investment mortgage. That means that you have a mortgage specifically for the purpose of renting out your house and it being an investment property. There are definitely possibilities there, and just check in if that's the specific situation that you're in, if you already own a home and then you want to change it into renting out, or if you directly want to buy an investment property, then an investment mortgage would apply. So yeah, there are possibilities. Again, both situations, you have to take a different route.
Perfect. Thank you very much. Then, what is the 10% deposit I would need to complete, Robin?
Yes, so I was just looking into the Q&As, but let me, the 10% security deposit, what it means is, so you put in a bid, it got accepted, happy days, you sign the purchase agreement, and then we'll take care of the mortgage application process. When that's done, you have all the security, because then you have the confirmation from the bank, well, here's your mortgage and you can buy this house. The seller doesn't really have any security then, because even though your mortgage got approved, you can just pick up your bags and drive into the sunset and never to be heard of again. To prevent that risk going on, there's the 10% security deposit, usually around 5 weeks after signing the purchase agreement. And what this means, it's kind of an insurance that if you do not move forward with the purchase of this property, you do not keep to the agreements that you set in the purchase agreement. Therefore, you have a penalty of 10% of the purchase price. The seller wants to be sure that you actually will be paying this amount. So therefore, the 10% security deposit comes in. There are different ways to take care of that. It's always 10% of the purchase price. If you have it available, perfectly fine. You can use your own funds to take care of that, because it will be completely separate from the mortgage. So you have to supply 10%, have to send it to the notary for safekeeping, and then a security deposit being what it is, after you kept your end of the deal, meaning you actually bought the house, you transferred the funds, or the funds were transferred, then the 10% will be released. If you don't have this 10% available, or you don't want to use your own funds, could well be, then you can also opt for a so-called bank guarantee. This means that a bank or a financial institution will secure this 10% for you, so they will guarantee that for you. The bank will guarantee it for you. Therefore, the name bank guarantee. So essentially, it's a confirmation, a security for the seller that you will actually move forward with this, buying this property, and if you don't, they will have this 10% penalty that you will be charged if you don't.
Thank you very much. What are your fees? Let me start with that one. So we have several different packages. We have the smart package, complete package, and a new build package. The smart package is technically kind of like a remote package. So it doesn't matter where you decide to buy, we can support you. However, we will not attend any meetings. So we'll not attend any viewings, we'll not attend any notary appointments. What we will do is we'll have an intake, and of course, we will review all of the details once you have found a property that you love, and then we'll help you with the offer submission and the legal documentation. We'll book in all the third parties and we'll offer support. The complete package is all of the mentioned before, but we will actually scheduling viewings, and we will attend viewings and the notary and the transfer as well. And then we have a new build package, which is a new package because we've received a lot of people requesting support with buying a home off plan. Technically, you buy off the drawing, so it doesn't exist yet. We offer support with that as well. And these are the prices, including VAT, so no hidden fees, no any extra top-ups. This is what we charge. How about you guys, Robin?
There we go. Yeah, I'm switched on again. So actually, we reduced our prices a bit. So this is a good news call here. The refinancing cost, so that means if you already have a residential mortgage and you want to maybe lower the interest rates or change something to your mortgage or make it an investment mortgage, is now, well, that has reduced by a full euro. So that's 2,499. And the first-time home buyer, moving homes, and buy-to-let have all been reduced to 2,999. That being said, our fees are fully tax deductible, and you get a financial analysis, of course. The brokerage is something that will obviously do, making sure that you get the best mortgage and you get the financial advisory. Obviously, it makes all perfectly sense, but this financial advisory doesn't only consist of the mortgage, but we take a look at your full financial situation and how to best manage that in different ways. Also, what happens if you close a mortgage? Your financial situation will have changed, and what kind of financial risk might you be subject to, considering also this mortgage, and then we'll also offer different ways to mitigate these risks, of course. Now, all the documents obviously will be translated in English, because anything that you would have to sign for any thing for any of the banks will all be in Dutch. Now, we don't expect you to take a crash course in Dutch, and definitely not in mortgage lingo, because, well, that's just a waste of your time. You can, obviously, but please spend your time on something else. And then we'll also advise you about the general insurances. Not only that, we'll also guide you through the house hunting process I mentioned, and that's something that we very much enjoy doing that with Expat Housing Network, because what we do is sometimes we even have a chat group with 4 of us, the 2 of you, Expat Housing Network and myself, to see, well, whenever you find a property that you think, well, this might be it, then we'll check the property on the specifications that might impact the mortgage, where Expat Housing Network is a star in finding out what the expected value is and what different different specifications are to look out for when you own the property. We also take a look at it from the financial standpoint, just to make sure that altogether we can give you the best option to actually win this bid and be the proud new owner of your home. So that's what we do. Yeah, these prices are also mentioned on our website, and Kimo, I'll share them with you for the next time.
Yes, thank you. So this is the ending of the presentation. We're going to dive into the Q&As. I do have a last request, and that is to maybe answer the questions that we have, because we would love to get your feedback. How likely would you refer this webinar to a friend or a colleague? I know there's still pending questions that we'll answer. Did you miss anything in this webinar, and what would you like to get more information on? This information will help us, because we can actually navigate in any future webinars, and of course, we'd love to get your thoughts. While we do this, I think we can already dive into the Q&As. So we're getting a lot of good feedback. I like to see that. A lot of 10s, 8s, 7, 9s. That's great. Did you miss anything in this webinar? A few people have missed something, but the majority of you have not. Would you like to get more information on the buying process itself, the mortgage process? Yes, of course, that's something we can dive into, but then we would need a couple of more hours to actually specify all of that. We'll be happy to share that in a one-on-one chat with you guys. So don't hesitate to book in a call, free of charge, no strings attached, and then we'll be able to also maybe cater a little bit more to your personal situation. Thank you for filling in the answers. I really appreciate that, and I will bring this scorecard back to my parents for a what is it, a car nowadays? No. I'll dive into the Q&As now. So we've answered a few questions. There's one question from Guru about, can we please explain a bit more about the NHG limit with regards to solar panels or a property where there can be improvements made to the energy label? I think we can be very, very easy and clear on that. So the NHG technically looks at the value of the property. So if you get the property evaluated, then that is what the threshold is. So it doesn't really mean if you can improve the energy label or anything like that, because the solar panels that will, for example, be on the property will be included in the valuation as well. So that is good to be mindful of.
One addition there, sorry, Kimo.
Yep.
Because I think what I know what they're getting at is, because if you regularly it's 355, but if you make your house more energy sufficient, it has to comply to a very specific set of rules. Then you would be able to finance up to 106% of that. But the only thing is that anything that you borrow more than the 355 that NHG will allow you to has to be for making your house more energy sufficient. So if it's already very energy sufficient, then you wouldn't be able to do that. But if you want to increase the energy sufficiency, there are possibilities, but they're very specific. So just if this applies to you, again, reach out and make sure that you know what's going on.
Perfect. Thank you. Then Maria asks, all percentage on mortgage are tax deductible regardless of threshold. So technically, I think she had a previous question before that. Where was it? Interest on mortgage, are they tax deductible? I answered yes. Is there a threshold to you which you can claim the percentage on tax return. Maybe this one for you, Robin. Does it make sense, the question?
Well, how the tax return, you don't necessarily have a threshold where you wouldn't have any tax return anymore. The thing is now the amount that you get back from the tax authorities reduces every so often, every year now with 0.5%. And it's the lowest amount, so this would be the amount to go with, because that's on the top of my head, that's 2026. This amount, this percentage is 38%. So that means that the amount that you get back from the tax authorities over the interest that you paid is 38%. So maybe that's the answer. It doesn't really matter how high your mortgage is or how high your income is necessarily. So that's all good there. So I hope that answers the question. That there's not necessarily a threshold there.
I think that's two birds in one stone, because Ioana had a question about, indeed, does your income have any impact on your interest tax deduction? It does not, as I hear from you. That's good. Then there was a few questions about when the parental donation ends. So right now, the likelihood of that ending is 2024. The tax services need to kind of like reset up their computer systems to actually make use of this new rule. So but that could be delayed. If I know anything about the government and the tax authorities, they're not necessarily the most efficient. So let's review that. Then a question.
One small thing there. If you get a gift from outside of the Netherlands, that's a different ball game. So if that's going on, again, let me repeat myself, just check in to see what your specific situation is, because it can kind of depend on where the funds come from. But it could be tax-free even.
Yeah, good one. Then a question from Thomas K. When the ECB increases interest rates due to the high inflation, is the housing market bubble expected to burst? That's a very optimistic question. Do you have any insights on that from a mortgage perspective, Robin?
Yeah, I think it's tricky to speak of a bubble, first off, because you can always see a flow going on. So we can see it in the interest rates right now. The interest rates dropped significantly last year, and now they kind of return to a more normalized value. So we can see a slight increase in the interest rate now, but not necessarily something that causes big alarms or something. And if anything, still there's a massive shortage, and that isn't resolved all of a sudden. So I wouldn't necessarily expect a big drop in property value or that nobody will buy property anymore, because in the end everybody wants to buy. Only if the interest rates might go up to 6, 7, 8%, then it starts to be more interesting to maybe rent for some time instead of buying. But I don't see that happening anytime soon. So I don't expect any issue there for short term.
I agree with that. Then another question is, how can we get the estimation of the market price? So of course we can help with that. There are several platforms, the Cadastre, which is kind of like the land registry, a public record where they keep a lot of the information about properties sold. You can dive into that. But it's a bit of a puzzle. Let me give you a few pointers. So the market valuation is dependent, like what we do is we use the how you say that, the comparison method. So we compare 3 to 5 properties that were sold in a similar neighborhood with a similar kind of like size in a similar period, so the last 6 to 12 months, and you use that to define what the market value is for your property. However, if you wait 6 months, that property value could already have gone up. So you have to kind of like add some variables to that. But technically, that's how you look at it. If you want to do that research yourself, have a look at the Cadastre. I'll add it in the Cadastre.nl. You can download some information there. Or if you want us to support with that, we can actually support you with that. There's a question linked to this. If the market valuation will be shared with the buyer once it's done by the appraiser, yes, it will be shared with you because you're technically paying for it. So the actual market valuation done by the appraiser will be shared with you as a buyer. Let's see, another question. This is an interesting one. Are PhD researchers eligible for a mortgage with limited period of job contract, for example, like 4 years, 5 years? Is there a minimum wait time to get a mortgage from the bank?
Very good question. first off, very well done being a PhD student. Very good. Not all lenders are too giddy to secure mortgages then, but luckily there's sufficient that do understand what it is to be a PhD student and what your perspective on the market will be in the end. So yes, there are possibilities. There are sufficient banks that allow you to just include the total amount of your income in the mortgage calculations. You just have to know what lenders to go with. That changes ever so often, but there's sufficient lenders that will allow you to give out a mortgage based on your full income without considering that's a temporary contract. Just solely on the basis that you're a PhD student is sufficient because you have a good job perspective.
Perfect. Thanks for the answer. A question from Nick Norris. What percentage of asking price is suggested as an upfront payment in order to make your offer appealing to a seller? Might offer 100% the value mortgage not be as appealing in the current market? So technically the question is like, how do you make your offer as appealing as possible, right? So in the end, it's about what you offer, what the conditions are, and how much security can you give. Technically, the amount upfront says something about whether you'll be able to move forward or not. So what I normally would advise is if you have any cash that you could pay up front, you could decide that. You could say, okay, hey, we're gonna offer what 50,000 euros over the market value, but we'll have that 50K, right? So we don't need the actual 100% mortgage on the full amount. What I normally do is I don't say transfer that money, but I say put in the offer an indication that you don't need the full amount of the mortgage, right? So you would only need 90% of the mortgage or 70% of the mortgage. That gives an indication that if you get 70% of the mortgage, you have to move forward. If you get 71, you still have to move forward. If you get 69, that's the only way you can actually pull out of the deal. So by sharing that, you say, okay, I have capital on the side. That is probably the most important thing that you can do. Have a look, of course, always at market value. And if you want to play around with that a little bit, say, okay, hey, I have more capital aside, so I could actually pay for the bridge price and even pay for the difference between market value and the bridge price and even some more. And therefore, I would only need a certain amount of mortgage, right? So that is something that I would advise there.
Again, small addition there. Also, like Kimo already correctly stated, I think, is that when you start looking for properties, be sure that before you do that, you reach out to a financial specialist to make sure you know your range, and then also definitely check in with a buyer's agent to know where you should buy. I think makes sense. If you work with us, for instance, then we can also set up a statement saying, well, this person has sufficient income. We have done our due analysis, and we know we're more than comfortable of this bid of X amount. So then that can give some weight to your bid as well, because then they know that you use experts in your process here. Give some security to the seller.
Yeah. Question from Seung Wong. What's the current interest rate for the mortgages in the Netherlands?
Yeah, it kind of depends, obviously, again, on these variable factors, but just to give you a basic, so without NHG, because NHG can lower your interest rate, without NHG and you take 100% mortgage and you fix it for the very general term of 10 years, then the average interest rate right now is about 2.1.
Okay, perfect. Thank you. So another question, do I still need to hire a makelaar to help me for searching the properties? What's your advice to look for properties in Amsterdam other than Funda.nl? So I don't necessarily believe that the searching of properties is an added value of the makelaar. I think that the added value of the makelaar is much more about securing the property and making sure you understand what you're buying and that you don't end up signing something that you don't understand. I think that's where the added value of the makelaar nowadays is. In the past, they used to have all these platforms where they get all these properties. I had a chat with somebody this morning about this, and there's still a platform, right, that makelaars have, but the properties that show up on Funda 1 or 2 days later, and you'll still be able to view it, and sellers will still want to see their property on Funda, except if it's above a certain price amount. So that is not necessarily added value. Again, the added value is much more in actually securing your price, understanding and helping you understand what you're buying, and you don't make any mistakes in the process. So what happens if the bank rejects the mortgage application? A question from Dax.
Shall I take it?
No, go for it. You go for it.
Yeah. So yeah, that kind of depends. not to toot my own horn too much, but well, it doesn't really happen that often. And the reason why is we would like to prevent that from happening, obviously, because it's just not a nice experience. But also, it doesn't need to happen in the end. If we have the information and we can do our analysis, we already know if your mortgage gets approved, even before your bid has been accepted. That's what we want to do as well. So when you put in a bid, we actually want to give you the security that you know that your mortgage gets approved. If there's any indication that it might not be, within the time that you can still withdraw, we'll definitely advise you to do so. But let's say worst case scenario, you just put in a bid without consulting anybody, and then you sign the purchase agreement, the reconsideration time is over, and then your mortgage will not be accepted. Then you have to pay 10% of the purchase price as a penalty. But yeah, again, just be well informed and don't let it happen. And I think with the due assistance, you're not in that risk of that happening.
I agree. It's never happened on us, and actually all of the mortgage applications that the guys from Mr. Mortgage have filed have actually gone through. So that's one of the reasons I think why we also like working with them is their success rate. So don't worry too much about that. And again, the preparation helps with this. So have a chat with them and make sure you don't do anything crazy on the market. There's a few questions related to the timeline, especially when it comes to offer acceptance, that I would like to answer. There's a question: can you reject an offer after you receive the valuation? So again, what is good for you to know is that you're only locked into a deal once you've signed the purchase contract and the cool-off period, which is about 3 days, have ended. Anytime before that, you can pull out without giving any reason. What is also good to know, because there's another question, is when can the seller pull out and when can't the seller pull out? Up until the moment they've signed their purchase contract, the seller can pull out. Afterwards, the seller can't pull out anymore, except for when he's added things in the purchase contract. But that doesn't happen. Well, I've never had that happen. So you are locked in with the seller once the purchase contract is signed, but you still have 3 days after signing the purchase contract to reconsider. Wake up sweating in the middle of the night thinking, oh my God, what have I done? I don't want to buy a house. I want to buy an island. So I hope that answers some of those questions. So there's another question from Mayuri. You mentioned that if we rent part of our living house, then it's taxable. Is that correct? If we rent out the full house, then the house comes under box 3. Somewhat specific, but curious to know that as well.
Yeah. I like the amount of research that you did, because it's true. When you rent out your full house, it's box 3. For what that means is that any income from that is not taxed. But when you own the property, when you live in the property as your primary residence and you have a mortgage on it, or even if you don't have a mortgage on it, any rental income will be considered as income, and that will be taxed, but only over a certain amount. And top of my head, that is, I think, 360 euros per month. Top of my head, it could be increased now a bit, but that's kind of the range that you have to consider. So if you don't own if you don't live in the house yourself, it's not your primary residence, then the rental income, and you rent it out the full house, then it's not taxed. If you do live in the property and you rent out part of it, then it is taxed to a certain amount.
Thank you for that answer. We're nearing the end of this session. I would like to answer 2 more questions. One is a very simple one about whether this thing is recorded or not, the webinar definitely, and you'll receive a newsletter most likely tomorrow, if not Friday. Tomorrow is Friday, sorry. If not Monday, with the link to the recording. So don't worry about that. No need to take any notes. So then I have one final question. There were some people that have, do you access the Q&A, Robin? Can you see that? Because I can't see that while I share the screen.
Yeah, there's some question there as well. During the webinar, I tried answering a couple of them. Yeah.
Maybe let's pick 1 or 2 out of those and then we'll wrap it up. Please know that if you book a session in with us, we'll answer any follow-up questions that you have. So don't worry. Good luck, and just book a session in with either Mr. Mortgage or with us free of charge. We'll spend some time going over your case, sharing information, and answering any question you have. Final question, Robin, from the Q&A.
Yes. Let's see. Which was so many to choose from. Let's see. I'll stretch it a bit. Let's take two. Kimo, how long do you expect the lack of houses to last for?
So technically, it's somewhat not necessarily hypothetical, but like the lack of houses, it's not like we have 300,000 people that are living on the streets. So it's not necessarily that there's a lot of homeless people looking for houses that they can't find. So it's more about kind of like how we've used our housing stock. So there's a lot of people who are still living with their parents or who are living with roommates that would actually love to buy or get something by themselves. I think the challenge will be not necessarily how do we build enough houses, because that's always the go-to solution, right? Especially if you're a project developer and you have some kind of like lobbyists in the government in The Hague. I think the question will also be, how do we make sure that we can reuse and optimally use our current housing stock to benefit the majority of the people in the Netherlands, right? One solution could be, of course, using the office spaces that are currently not being rented out. Another solution is there's a lot of like elderly people who are living in a big house, but technically keeping that because otherwise it might impact their pension, or there's no kind of like suggestions or alternatives for them. I think there's plenty of things that we can do. If you'd ask me, will it be solved on a short term? I don't think it will be solved because we have a somewhat liberal government in place, and they really kind of like prefer a sense of freedom when it comes to home ownership, or a right of ownership when it comes to properties or other parts of real estate. So I don't think we'll see a solution soon. But in the end, like if it becomes less interesting to buy, then we might continue seeing people rent more. But I think that the next couple of years, we'll continue to see a increase in number of people moving here, and not making the quotas for the housing supply. So yeah, I think at least like 10 years before we see any major change there.
Yeah, I agree. It can take a long time if we get there.
Yeah.
The very last one was from Mandy, and that was regarding what happens financially. Does it have any impacts if you want to buy a house here in the Netherlands, but your partner still lives abroad? There are definitely possibilities there. It kind of depends on what your situation is. Are you married for Dutch law as well? Is that registered here? But there are definitely possibilities there. Even if your partner is planning to move to the Netherlands and is going to work here, for instance, there are definitely possibilities there. There doesn't have to be any financial implications, but I can't stress it enough. If you have a specific situation, definitely check in with Expat Housing Network and Mr. Mortgage to just make sure that you know what it's all about and what you can expect. Now, there are a lot more questions in the Q&A and in the chat, a couple of them as well. I very much like that. Means that you're very much dedicated to learn more about this. There's much more to learn, but usually these questions are quite personal, very specific situation. So just check in with your preferred experts and make sure that you're well informed. And we'd love to have an introductory call with you guys.
Perfect. Thanks a lot, Robin. And thanks a lot, everyone, for listening in, and also for asking all of these questions. Again, book a session with us if you have any follow-up questions. I saw some interesting ones about Airbnb, about implications, and so I think there's a lot more to learn. Like Robin mentioned, we'll be happy to share that with you. For now, have a lovely day and a lovely weekend ahead. The sun is shining, the weather is sweet, so enjoy. And we will see you hopefully on a one-to-one, or otherwise, good luck on this housing market. Yep.